Very warm welcome to all of you. I'm Devarsh and I'm joined by my two colleagues, Nagaraj and Ajit, for this fortnightly market outlook webinar. So markets are at an interesting juncture. We are at all-time highs and a lot of investors are cheering the rally. So whether this rally is sustainable, whether we are going to head much higher or not, my colleagues Nagaraj and Ajit will try to discern this from the technical and derivative perspective. And before I hand it over to them, let me just take a couple of minutes and share what has happened in the global markets. So post the results of the general election, 4th June debacle, markets have done a remarkable run. From 5th June to 5th July, the Indian benchmark indices are up 7.5%, Sensex and Nifty, while mid cap and small cap are up 11 and 16%. So as on the election day debacle, many investors got an opportunity to buy or add to their positions. Our strategy also recommended that we should buy into the dip. If you happen to deploy some capital, you had a fantastic 1 month where about 7 to 10% on an average return has come. Many stocks have gone up 15 to 20%. The pace of the rise has moderated over the last fortnight. From 5th of 21st of June to the 5th of July, the indices are up about 3 to 3.5%. The mid cap and small cap are now in tune with the Sensex. Compared to that, many parts of the world, especially China, is still struggling. It is down about 1.5%. American markets are also doing quite well. There, they are about 1 to 3% higher. The Nasdaq is the leader now. The technology stock, especially stocks like Tesla, has actually done quite well. Now, we'll go to the next slide where we'll see what kind of stocks and sectors are performing. So as you can see, the capital goods and the IT are the top performers now. IT has rebounded about 14% over the last 1 month, and capital goods is also 14.5%. The FMCG sector is struggling over the last 1 month. This is likely to change now. We are expecting good monsoons, and FMCG stocks are showing some signs of revival. Over the last fortnight, consumer durable and realty sector is underperforming, while technology, capital goods, and IT is top performing sectors. From now onwards, we'll need to be cautious on capital goods and engineering. This sector is near the cyclical peak, so we expect capital goods to underperform over the next fortnight, while others sector may take a lead. So this pecking order is up for a change. That is our expectation over the next fortnight. So that's what I wanted to cover about these two, the indices and the sectors which are performing. Now let's go to the numbers for the institutions. Institutions are net, they are not able to add to their positions on the cash market. The whole rally which we saw has been participated by mostly the domestic investors, the retail investors, and this is likely to continue. That means the mid cap and small cap are continue to be in limelight as long as the DIIs are in the buying mode. Now, how long the rally in the mid cap and small cap will last? What are the likely levels in the Nifty and Bank Nifty? My colleagues will share, and they will also share, try to take your questions. So over to you, Nagaraj. Please go ahead.
Okay, thank you, Devarsh. Is my screen visible?
Visible.
Okay.
Yes,
I think yes. Okay, thank you, Ajit. Friends, good morning. Welcome to Fortnightly Market Outlook webinar, and we will discuss in detail about the technical aspects of the market. We will also discuss about the global markets, commodities, sectoral movement, and the broader market indices in detail. Before resuming this fortnightly market outlook webinar, previously I would like to share we had a mid-week webinar on Wednesday. We have discussed the similar kind of technical aspects of the market in a brief. Previous to that, in the month of sorry, end of June, on Saturday, 29th of June, we have prepared a monthly technical outlook. In that monthly technical outlook, we have briefed about the market, about the long-term aspects of the market. In that, we have mentioned around that time, Nifty was around 24,010. We have predicted that the overall trend of the market was positive from smaller to larger time frame, and we have predicted that 24,000, 24,400 is going to be the immediate hurdle. After that, the next bigger upside target of 24,960 could come in. 1 week has passed after our prediction. Now let's see where the markets are placed. Now let's see the current situation of the market, and we'll see the one by one slide from here onwards. Friends, this is a daily chart. What has happened over the last 7-8 sessions? Market has been continuously moving up. We can see it from here onwards that that market has been continuously moving up, even though market is placed at the higher levels. A minor selling pressure is emerging at the higher levels, but that is not converting into a bigger reversal. At the lower levels, a small 100, 200 points lower levels, market is emerging a buying interest from the lows. This has happened over here a couple of weeks back. From the lows of 1 day of decline, from the lows, market has moved up and continuously moved up for 7-8 sessions. Again, at 24,000 odd levels, market is forming a minor reversal, minor top, we can say, but that is a short term, we can say, but that is not a reversal pattern at the higher levels. Market has declined yesterday on Friday and bounced back towards the end and closed near the highs. The overall chart pattern from the smaller time frame is very strong. We are not witnessing any decline, though Nifty placed at the higher levels. There is no indication of any important reversal confirming at the higher levels. So far on the front, on the database, there is no fear of a market forming any important top reversal as of now with this data. Now let's move to our weekly chart. This is the weekly chart. In the weekly chart, last 7-8 months, market has been in a continuous rise. By forming a higher tops and higher bottoms. We can say this moving average is green and purple moving average. Purple is the 10-week EMA and green is the 20-week EMA. Market has been continuously, Nifty has been continuously respecting those 10 and 20-week EMA before showing its up move. Whenever the dips have occurred in Nifty up down to a 10-week EMA or down to 20-week EMA, the market has eventually bounced back from those supports and moved up. Last 1 month's period, the market action, especially after the general election results, after the dramatic decline, the market movement from the lower level, the way market has bounced back from the lower level around 21,800 odd things, it's phenomenal. Market has witnessed a sharp upside bounce so far in the last 1 month and currently placed around 24,400 levels, made a high of 24,400, which is so far a new all-time high. But still, on the weekly front, market is very strong. We can see this long bull candles on the circle, which is indicating the strong upside momentum in the market at the higher levels. Last 5 weeks, market has been continuously moving up. So this is, friends, this is a monthly chart. We have analyzed the monthly chart on our monthly report. We have mentioned some characteristic of the market over the last couple of years. What has happened over the last 2 years as per the monthly time frame chart, how the market has behaved. We will discuss in a briefly that if you can see this circled this area of highlight, what we can observe that whenever the market has completed its downward correction or whenever the Nifty has completed its range bound action, market Nifty has moved up for the next 2 or 3 months subsequently. So we can see over here, first highlighted area where Nifty has declined for 3 months and the next 2 months it has bounced back. After that, declined for 4 months and next 4 months it has bounced back. After shifting into range bound action over here, and again 2 months of sharp up move has occurred. In the last area, last circle, what we can observe is 5 months of continuous range bound action in the market. Actually, the market was moving up, Nifty was moving up as per higher highs, higher lows, but on the larger time frame front, it was looking like a range bound action within a broader high-low range. After that range bound action of last 4-5 months, June, market has exploded on the upper side. The trigger was the election result, general election result. Market has dramatically declined and suddenly moved up. Since then, market has continued its up move. Now it's a July, the follow-through up move has started. What I'm expecting, as happened in the previous 2 to 3 occasions, after the downside, after the upside breakout, or after the completion of a range bound action, or after the completion of a downward correction, as per the long term, whenever the Nifty moves up, at least moves up for a 2 months or a 3 months. Last June month was the 1 month, first month after the upside breakout of the range, and I think I am hopeful that July month is going to be the uh, uptrending month for the Nifty. So we are probably likely to see up move in the month of July as well. This is what larger term charts are suggesting. And friends, we'll see what are the immediate targets. This is the Nifty weekly time frame charts, and in that we have taken a Fibonacci extension. We have taken a 3-point extension over here. This is taken from September 2023 top to connect it to the March 2023 bottom. Taken from September to 23 March 23 bottom, taken from September 23 top, and taken again from the October 23 bottom. So net to net, March 23 bottom, September 23 top, and October 23 bottom. We are getting the projection for somewhere around 1.618% and 1.786%. 1.618% comes around 24,300, 400 odd levels. We have already reached the 24,300, 400 odd levels, and market has consolidated. Even though it has Nifty has reached the 1.618% of this Fibonacci extension around 24,400, 300 odd levels, there is no indications of any sharp decline. There is no indication of any sharp upward reverse top reversal pattern forming at the highs. That means the strong resistance is not resulting in a sharp decline for the market. The point has to be noted. Even though market has placed at the important resistance of 1.618% around 24,300, 400 level, market is not showing any sharp decline, is not showing any reversal pattern. After that, once Nifty moves about 24,400, 500 levels, the next resistance would be around 24,850. That is 1.786%. Fibonacci extension comes around 24,850, 900 levels. So we can say around 25,000 is going to be the next hurdle, rough to rough. So from here, I'm expecting the next important resistance of around 24,900, 25,000 level when the Nifty sustainably move about 24,400, 500 level. This is going to happen in the month of July. Friends, next go to the union budgets. We all know that the union budget will be presented in the month of July, and we'll just study the previous history of the union budgets. Friends, previously we have seen around we have taken the data from 2015 to 2024 interim budgets. What we observe most of the time, whenever the market has declined and whenever the market has formed important reversals, market has bounced back. And sometime market has continued its upside continuation, turned as an upside continuation pattern. So these indications are suggesting that even though there may be, even though market dips down during the elections or after the election, there is a possibility of market bouncing back from the lower levels. Few indications, few time market has occurred that soon after the election it has declined and subsequently it has bounced back from the lower level. Means that is indicating that whatever the decline happens, even though not happened exactly, is going to be a buy and dips opportunity as per this previous budget impact on the Nifty. So friends, this is the Bank Nifty. Bank Nifty chart. We all know that after the news of HDFC Bank market, this banking sector has bounced back sharply from the after the consolidation. Currently showing higher tops, higher bottom formation, though placed around 53,500 kind of a resistance. It has declined slightly on Friday, but the overall chart pattern is very strong. The Bank Nifty is continuously taking support of a 10-week EMA. This is purple line is a weekly chart and a 10-week EMA, and currently placed a 10-week EMA. High wave type candlestick pattern has been formed on the daily chart, in fact, and the Bank Nifty is likely to bounce back from this support. So this is 10-day EMA, in fact. So I'm expecting a positive trend is likely to continue for the Bank Nifty. The way whatever the decline we have seen in the last couple of sessions is going to be a buy and dips opportunity for banking sector as well. We go to this mid cap. This is the broader market indices. Mid cap, left one is the mid cap and right one is the small cap. Similar kind of a movement has happened. If you look at the both the chart, looks like a Xerox copy of the each other. So the trend remains strong for the mid cap as well as small cap. The hurdles of one after another, the hurdles are being taken out on the higher side for this both broader market indices, and they are making conquering new highs every day, day on day basis. This is very positive indications. We all observe that some of the selective mid cap and small cap stocks are buzzing like anything, and those stocks which are not performed, they have started to perform. And I think this chart pattern of mid cap small cap is indicating, though it has placed at the higher levels, still there is no indication of any tiredness forming at the higher levels. I'm still expecting that the buzz which has started in the selective mid and small cap segments are likely to continue for at least some more period of time until we see some significant reversal pattern in the higher time frame from the smaller time frame. As of now, there is no indication of such patterns in the broader market segment. So friends, we'll see some of the global market which were in the limelight recently. First one is the Dow Jones and Nasdaq. The second one is the Nasdaq. Dow Jones is continuously showing some high consolidation pattern at the higher levels. What we can say is the ascending trend triangle type pattern has been formed in the Dow Jones on the weekly time frame at the higher levels. This is the horizontal line. This is the ascending line. Ascending line indicates the Dow Jones is forming the higher bottoms, and horizontal line is indicating there is a strong resistance at the higher level. So eventually this higher bottom formation, and repeated testing of this resistance could eventually witness enough upside breakout in the Dow Jones. But the Nasdaq is showing a different story. Nasdaq has moved up, shown a decisive upside breakout, and is continuously moving up over the last 1 month. Moved into a new high territory. There is no indication of any reversal, but still it's moving on. Now, the two global markets like CAC and Nifty, France and Nikkei. So CAC was declining, was in a downtrend over the last 1 month, and in last week we have seen some important bottom reversal at the ascending trend line. This is the ascending trend, a very strong support, and this CAC has formed important bottom reversal, formed a bullish candlestick pattern like on the weekly time frame, and are likely to move up. And the same thing at the Nikkei. Japanese market has moved up sharply in the last couple of weeks, and after the consolidation, placed on the verge of moving above the new all-time highs. I think the overall chart pattern of Japanese market is looking positive. We are likely to see a further upside. So we'll see some interesting moment in the gold international. This is the chart of a gold international, and gold is forming after a new highs. Gold is forming a larger consolidation, which is happening over the last 3 months. What is larger consolidation? Whenever this type of consolidation has happened, not happen in the as per the technicals, market tend to show the trend continuation pattern. Previously, also we have seen similar kind of a consolidations here, similar kind of a consolidation here. Eventually, gold has broken above the consolidation and moves into new high territory. So the upper range is 2465, which is a strong resistance. Lower range is 2292, and gold international is moving within the range. Once it breaks above 2465, 2500 levels, then the big move is likely to occur in the gold as well. We will see the commodities, Brent crude. What we can observe in the Brent crude is a larger consolidation band over the last 6-7 months on the weekly time frame chart. This is larger consolidation is a bigger pause for this commodity. I think as per this pattern, from the lower end of a triangle, this Brent crude is moving towards 87, 88, which is a strong set of resistance. As per this pattern, when this triangle pattern completes, then there is a higher possibility of a decline from 88, 89 or a maximum 90 levels towards the lower end of a triangle, which is something somewhere around 81, 80, 81 level. So that is our prediction for a long-term, medium-term prediction for a Brent crude. I'm expecting this further up for the Brent for the near term. After that, there is a possibility of a correction from the higher levels from around 89, 90 levels towards the downside for the next few weeks, or we can see. So these are the global market indices that Devarsh mentioned, as discussed, and sectoral performance, how sector has behaved in the last 1 week, 1 month, and this is the FI net inflows in equity segments over the last 12 months in the rolling. So friends, will conclude. What is the conclusion? We have discussed everything about the market. We have from a smaller time frame, larger to larger time frame. We have discussed about the market. We have discussed about the global market, broader market, sectoral indices, and other asset classes. And we'll conclude what exactly is happening in the market. The short-term trend of Nifty remains positive with the range bound action. We have seen more of a range bound action, but the tone of the market is clearly positive. We are forming new highs every time. Nifty has bounced back from the one-day dip on Friday from near the immediate supports. Though Nifty placed at the higher levels, there is no sign of any reversal pattern building at the highs. That is true. The decline is limited as of now. Previously, also a few weeks back, we have seen 1 day of decline. Market has bounced back from the lower levels. On Friday, also we have seen 1 day of decline from the support, from near the support. Market has bounced back. I think the market is poised for the more upside. More new highs are likely to come. Further up about 24,400, 500 levels. As I mentioned, 1.618% resistance. Fibonacci extension resistance placed around 24,400 odd levels, 350, 400 odd levels, and the market is now making a work to break above their 400, 500 levels. Once the 24, 400, 500 levels broken on the upper side, the next upside target would come in around 24,960 for this month, which is the next resistance as well as Fibonacci extension, which is 1.786% resistance. At the same time, friends, the immediate support is placed around 24,000 to 23,900 levels. Long-term trend of the market remains positive. Intra-month dips is going to be a buying opportunity. The uptrend intact in the broader markets like mid-cap and small cap. But friends, one needs to be cautious at the over-leveraged stocks. We need to profit book regularly, even though market is not showing any sign of tiredness or sign of any reversal at the higher levels. We have to periodically book profit in a profitable long position. Needs to be cautious about the over leveraged stocks. We know that some of the PSC, PSU, some capital goods stocks have moved up like anything. Even the technical patterns and valuations are not justifying at this high. One needs to be cautious, place a strict stop loss for such a leveraged stocks. Sectorally, friends, pharma, banking, pharma, oil and gas, energy, FMCG, infra are expected to, and IT, even IT are expected to outperform in the near term. That's all brief from the technical front. Now, I would like to invite my colleague Ajit Nayak, who is going to discuss about the Nifty as well as Bank Nifty on a derivative front. So, Ajit, would like to request Omkar to make Ajit present.
Yeah, Nagaraj, is my screen visible?
Yeah, it's screen is visible. Make a full mode.
It's a full mode.
Yeah.
Now?
Yeah, it's visible.
So thank you, Nagaraj, for giving us a very detailed explanation about the market. Nagaraj, so detailed explanation about the market. You have very well explained the structure of the market as well as the trend of the market. So now let us understand the market from a derivative perspective. From understanding the market from the derivative perspective is very important because it gives us a very true information about where the open interest means where the sentiment of the market is actually placed. So when we club the technical and the derivative, we get enough more confidence to trade on the market. So though the derivative perspective of the market is in a very short term, we cannot analyze it for a long term, but short term trading it gives us an add-on advantage. So let us understand what has happened during the week. So during the week we have seen long build up in the Nifty. Nifty has risen by 1.3%, where open interest has also gone up by 1.5%. Long build up is also witnessed in the Bank Nifty, where we have seen 8.5% open interest going up with the Bank Nifty 0.6%. This indicates there is a huge long build-up massive long build-up has taken place in the Bank Nifty as well at the current level. Put writing is seen at 24,000 and 23,900. So this will explain with the help of the next slide. So this is a detailed explanation where the put and the call writing has been taken place. So why this slide is important? Because it will give us an idea where we have to place a stop loss and where market can head and below which level market can see a good amount of correction. So whenever we always have been telling about that whenever market is in a bullish mode, it respects the support more than the resistance, and all resistance has it takes out very easily. So it creates a very meaningful support. So we have to focus more on the support during a bull market, because whenever market approaches that support, we can create a long position. And if it goes and close below that support, then it creates a problem. So now we have to keep in mind that 24,000 will act as a crucial support going forward. So whenever market takes a dip near these level, we can create a long position. And if it breaches this level, then there is a possibility that market will go for a correction. And whenever we look for a target area, we look for a overhead OI buildup in a call segment side. So whenever there is a highest OI buildup in a call segment, we believe that it is a kind of a call writing which has been taken place in the market. So here, looking at the diagram, we can see 24,500 and 24,800. These are the level where market can test. If market rallies from the current level, it can test 24,500 level. And if it breaches about and sustain about at 24,500 level, it can easily test 24,800 level, where the next highest open interest has been taken. Now, the smart money, we call FIS as a smart money. So if you look at their data, so they are been continuously building up their long position. So this time they have bought 16,443 worth of amount of long position, where open interest has been gone up by 34,171 contract. Similarly, they are also seen a long position in the stock future segment. That is why we have seen many of the stocks from the FNO segment has given a very outperformance during the week. So what does this indicate? And here, if you look at the FI's long to short ratio, it has reached to 5.19. This is the highest since 2021 level. The highest point is somewhere around 7.10. We have yet to achieve that level, but they are continuously holding their long position. They are moving their long position from this month to next month. So rollover is also there. Positive rollover is also there. So the overall sentiment of the market as of now stands very bullish. So we need to be cautious when market breaks and sustain below 24,000. So what will be the outlook for the Nifty? So we have to trail our stop loss to 23,900 level because there has been long build-up in the Nifty futures. Long build-up is also seen by FIs in the stock future segment as well as in Nifty future segment. So it indicates that the downside is limited and will trail our stop loss to 23,900 level. On the higher side, we'll look for 24,400 to 24,500 level as a strong resistance, because we have seen in the previous slide that there is a lot of over interest which has taken place in 24,500 level. If we close above the 24,500 level, our next immediate target which we are looking for is 24,800 level. Similarly, in case of Bank Nifty, what we have seen during the week is Bank Nifty was little initially it was outperforming the Nifty, but of lately in last 2 days, Bank Nifty was underperforming. So we have to be cautious with a Bank Nifty level as well. So 52,000 level will act as a crucial level. So hold the stop loss with the 52,000 level. On the higher side, we can again see Bank Nifty retesting. If 52,000 is held, then 53,000 to 53,500 will act as a strong resistance. So any close below 52,200, because we have seen a long build-up in the Bank Nifty, so there is possibility of unwinding of those long level, which can drag a Bank Nifty up to 51,000. The range, if you observe, the range is very huge between the support level, because the volatility has increased, and due to this volatility, the range increases. So during a narrow volatility period, the range remains very small. And if we look at the open interest from a sector perspective, we can see a good amount of long buildup has taken place in chemical sector, in IT sector, in oil sector, and in pharma sector. Especially in pharma sector, there has been good amount of stock participating. What we can do is like we can keep focus on these sectors to create a long push. Yeah, thank you everyone. Over to you, Nagaraj.
Thank you, Ajit, for your good presentation. Now, friends, if you have any question, we'll take few questions. We will not be able to take a stock specific question. On any other sector or a market specific, we can write it in a question box, and we'll be trying to answer your questions. Before participants moving into questions, Ajit, on the derivative front, where the bank nifty is placed, and if the bank nifty is looking positive on the derivative front, what are the banking participants are looking very positive in this bank nifty journey, upside journey?
Bank Nifty, as I said, 52,000 will play as a very crucial resistance support. And if we want to tell from the participant point of view, I can just say that private sector banks are looking very lucrative when compared to the PSU bank. We have seen that PSU bank has rallied, has given a spectacular run in last couple of months. So I think some rotation could take place in a private sector bank. We actually cannot disclose the stocks, but stocks like Federal Bank and all, I think they are in a verge of giving a good breakout. So we can see those stocks performing in coming weeks.
Okay,
Private
there are
sector
a few
bank.
questions. Yeah, thank you, Ajit. There are a few questions. Please also share fundamental analysis of the market and valuations. You can request these are technical aspects for any fundamental regarding the sectors and stocks. Please send a mail to us. We'll happy to revert to that. And one more participant is saying, please share list of overvalued and leveraged stocks. Please send a mail to us. Would like to resolve your this doubts, and we'll send you the query. Could not it be a Hindi language? Presently, we are actually very good suggestion. We are doing it this webinar. Prasanna Nigam is asking. We are doing it in English. Is a universal language as present, and even we could start in Hindi as well as we will try to speak in Hindi as well as in between. It's a good suggestion. And Neville Kumar Patel is asking, can we expect rally continuation in defense? Defense already moved up very well. We have to be cautious. As I mentioned, even though small cap and mid cap sectors and certain sectors placed at the higher level, there is no indication of reversal forming at the high, but we need to be cautious on over leverage. The upside momentum is likely to continue, but you have to place a strict stop loss, and you have to look for a regular profit booking in PSU stocks. And one more question is from prediction about the Geo Finance Service. Vignesh, we are not able to answer your individual questions. You can call us during market period, market time, or send us mail regarding individual question. Prediction about the share, please share the email ID. You can mail, you'll get the mail in a mailbox. You can send a mail. You'll get them all in an Outlook. If you write the name, and you'll get a mail ID over there. Otherwise, if you can see the reports on the bottom side of the reports, our mail ID and telephone numbers are mentioned. Japanese yen doing 38 down versus dollar outlook. Sachin Gaikwad, we are not covered the currency in this front. You send us a mail, we'll revert on this. Which sector is looking positive? Yusuf is asking which sector is looking positive till the budget. Yusuf, I think capital goods are the one they have, even though moved up, are likely to continue the upside momentum. Even PSU, some of the PSU, even PSU banking stocks, we have seen some keeping quiet. They will move up. PSU, other PSUs are likely to continue. Some railway stocks are likely to continue. They have started after the consolidation. These are the stocks which are already moved up. These are the sectors which are already moved up, are likely to continue for some more during till the budget. We need to be cautious in those sectors. And stock specific, Bharti Airtel, Yusuf is asking, we are not able to answer this stock specific as per compliance. Any view on textile and chemical sectors are looking positive? Ajit, do you have any view on textile and chemical sector specific? You must be tracking recently.
Yes, Nagaraj. They both the sectors are looking positive. So we have also mentioned in our presentation that chemicals are looking good, and even textiles on the charts they are looking.
Yeah, Rikin and Kushal are Rikin is asking about railway stocks. Ajit, you must be you must be tracking the railway stocks recently. They have started them. What is your take on this?
Yeah, so after the election, after a couple of consolidation days, they are now starting a very good positive news. We have also positive news regarding some railway stocks. They are getting the good orders. So I think till the budget, there is a scope of it going up, but it all depends again on the budget, what actually FM needs to say about those sectors. So it is a very a news kind of a sector going forward from here till we end the budget time. And once the budget is over, then again we'll look for the technical patterns and then we can take a call. For as of now, after consolidation, they have definitely started showing a good sign.
Okay, and thank you, Ajit. Vishwanathan is asking, what is your view on defense and telecom sectors? Defense is the one they are continuously moving up. They are currently also moving up, though they are placed at the higher levels. I'm again reiterating, they are not formed any reversal, but one needs to be very cautious in defense as well. We have seen some stretching, the utmost stretching in those sectors. Better to look for a trading buy, better to look for a regular profit booking in defense stocks. Housing and Jayesh is asking housing sector, realty sector. Realty sectors are looking, trend is looking positive. Recently, we have seen realty showing some consolidation or a range bound action. I think in the next up move, realty sector could come up, pick up, and some of the prominent stocks of realty sector could start outperforming in the over time. Ajit, Jayesh is asking NBFC. I think non-banking financial corporate NBFC stocks are looking in a limelight. They have started the upside momentum on the after the small consolidation. What's your take on this?
Yeah, those sector is also supported because of the budget. So there there is some spreads that there could be a very relief in those space also. So those sectors are also moving. If you look at the market, Nagaraj, most likely most of the sectors this after the election result, most of the sector has been gone up like anything. So it is a wide across a market participant was observed. So most of the sectors definitely are looking good on chart.
Yes, NBFC looking positive. So we have taken a sufficient question. I think we need to close. We have taken some good time for this webinar. I thank you everyone. This is the webinar that on regularly on midweek as well as fortnightly webinar, we come out with the market outlook on technicals from the smaller to larger time frame. We will recommend the market, we'll recommend the sector, other asset classes. One needs to place a stop loss. Whatever that we recommend, please follow it. So that's all from our side. Thank you, Ajit, and thank you everyone for participating.
Yeah, thank you everyone for participating.
Thank you.